situation, but you're pretty much guaranteed for that to not happen if you're on a laptop or desktop. Now, if you don't have a laptop or desktop and you are joining us from a mobile device, obviously still stick around. You should be able to stick around for all of it. You may experience some issues, but if you just refresh down on, but if you do have that opportunity to switch, please go ahead and do that now. We will be getting started here in just a few moments. Until then, and we'll talk to you soon. Thank you all for joining us today. My name is John Deneke, and I'm going to be joined in a moment here by Brian Bonwich, who is our senior finance contributor. He's the real stock market guru. I'm just here to help him run the show. So do me a favor, if you haven't done so already, type in the chat box where you're from. We have people joining us today from all over the world, US, UK, Australia, Canada, I see as well. We really like to know where you guys are tuning in from, just out of curiosity's sake, but it also helps us to curtail the information as much as possible throughout the presentation. If we need to make a specific note about something we're talking about in your region, we can do that. It also sets the stage for participation. So please, we're going to be asking you a series of questions and asking you to engage and interact in the chat window throughout the class. It's going to not only make it a lot easier for Brian and myself up here as presenters, knowing that you're engaged and listening, but it's also going to give you a much better experience as well. So please note that the chat box is private, so anything that you send in there will only be seen by the moderators, so myself, Brian. We also have an individual named Scott Krupp on the web class as well today. He's going to be answering questions and following up with individuals as needed. If you do have questions throughout the web class, please type them in there, and if we don't answer it during the actual presentation, we'll stick around at the end and do some Q&A. So our agenda for today's web class. In our short amount of time together, our goal is to make a big impact in the following ways. One, we want to provide you with confidence where there was once uncertainty. Two, give you clarity where there was once confusion. And three, to maximize your true potential so you can achieve everything you have ever wanted in your life. Yet if nothing else, we're here to show you how to make money in the stock market, right? That's why you're here today. That's what we told you we were going to teach you, and that's exactly what we intend to do. Because investing in the stock market is the #1 way to achieve your financial goals and build real wealth. And the fact that you're here today on this web class shows me you already realize this. You already understand the importance and recognize the importance of knowing how to invest, something you've always wanted to know. And the fact that you're here today, you've committed to learning, makes you much further ahead than so many other people out there. So go ahead and give yourself a pat on the back just for that. But why is investing so important to know? Why is it the #1 way to achieve your financial goals? Well, there's a variety of reasons, but let's look at this quote from Albert Einstein here. Compounding is the most powerful force in the universe. Compounding, right? And the stock market is a compounding machine. Let's look at an example of compounding in action, the power of compounding. So in this example, we're looking at two individuals, one at age 25, one at age 35. The individual at age 25 invests a total of $96,000, okay, starting at the age of 25. The individual 35 starts 10 years later and invests $72,000. So a difference in total contributions of $14,000. Yet at the age of 65, when they reach retirement, that difference accounts for $200,000, that $14,000 difference. That demonstrates the power of compounding returns, the power of compounding that exists in the stock market. And plenty of normal people like you and I have used the power of investing, used the power of compounding to achieve their financial goals in a big way. Let's look at some examples. Maybe you've seen some of these before. How one teacher became a self-made millionaire by age 36. A 96-year-old secretary quietly amasses fortune, then donates $8.2 million. A janitor secretly amassed an $8 million fortune and left most of it to his library and hospital. An individual by the name of Mr. Money Mustache, the man who retired at 30. This couple retired in their 30s. Could you? Now, guys, I could do this all day long. I could go through and show you all of these examples and articles of people who've been able to use investing to achieve their financial goals. And as you can see here, these are really big financial goals. Talking about retiring early, sometimes your 30s and 40s, it seems a little crazy, but it happens, and it happens every single day. And all these examples that I've shown you, what do all these people have in common? Did any of these people have high salary jobs? Did they win the lottery? Did they receive a huge windfall? Did they start one of these businesses that maybe you've seen promoted recently as the next get-rich-quick scheme? Dropshipping, affiliate marketing, Avon, Mary Kay, Herbalife, opening pearls on Facebook. Did any of these people do any of this to achieve their financial goals? And the answer is absolutely not. What they all do have in common is they invested their money. And guess what? Their wealth is continuing to grow day after day, even though they are no longer working, right? Now, they're at the point in which these investments that they've made are growing passively. And that's because their investments are appreciating assets, or assets that appreciate in value. And that's exactly what happens, or what you get when you invest the right way in the stock market. Let's look at the Dow Jones Industrial Average, which is kind of a barometer for the stock market since 1910. As you can see, it always increases, goes up, or appreciates over the long term, right? Yes, there are a few dips here and there, but overall it continues to go up. And that's exactly what you would like to see with your own investments, with your own portfolio and your own growth. Let's look at a quick example here. Imagine if you had bought Amazon stock back in 1997. Well, a $5,000 investment in Amazon stock, make sure you're sitting down for this, would be worth more than $5 million today. But it's not just Amazon. If you were to invest $1,000 10 years ago into some of America's most famous companies, and companies that were household names even then, well, look at the growth you'd have. So let's look at an example like Netflix, 52,000, Amazon 12,000, Apple 6, Starbucks 4, Nike 3. Again, these growth percentages, 192, 182%, are astronomical, and these are growth percentages you're not gonna see these anywhere else, guys. You're not gonna see these with Bitcoin. You're not gonna see this with real estate, or pretty much any other place you could put your money. And you know what we're showing here is that you don't need a lot of money. Okay, $1,000. This could be, you could even have broken this down to 500. But in addition to that, many of these companies were household names 10 years ago. We're not talking about you have to find the next big thing and be very speculative and guessing about it. It's most often not required. But now, unfortunately, you can't go back in time and buy Amazon. But I'm sure if I knew of a way to do that, we'd have even more people in the web class today. But here's what you can do. You can commit to learning how to invest so you can experience similar growth with your money over the next 1, 5, and 10 years. Now, you're probably thinking, why doesn't everyone just do this, John, if it's so easy, if I'm making it sound like that? Why isn't everyone retired by 30, cruising the world in their yacht and partying the night away? Well, here's the thing. What we're going to teach you today is actually very simple, but it's not easy. It's not easy because you were never taught this before, okay? The idea of financial literacy, the idea of managing and growing your money is not something that you were ever formally taught in any school or university. It's not easy because it's actually counterintuitive to what you probably think is correct. Now, we're going to be going over a lot of common misconceptions and myths today, and maybe you have some general ideas about what you think is required or what you think you need to do to make money in the stock market. And what we often find is that what we teach today is actually the opposite of what most people believe. It's not easy because there are so many people working to make sure you don't understand this stuff. There are entire industries that are based on the fact that you think this is a super complicated black box that you'll never understand, and instead you have to pay somebody else to do it for you, right? But you've most likely realized this already, haven't you? You've probably noticed that there are all these forces working against you that really, are kind of out there to make sure you don't succeed, okay? And that's where we're here to kind of help you turn the cheek of that and see that we're actually here exclusively to help you succeed, okay? And if you succeed, we succeed. So our goal today is we will help you understand exactly how you can achieve your financial goals through investing, whatever they are. Let's think of it this way. Investing is the great equalizer. It doesn't matter where you're from, your education, how smart you are, how smart you think you are, your background, your career, how much money you currently have, how much time you have. In fact, you don't even need to be in the US. Now, we're going to be predominantly talking about US markets and US companies today, but the principles that we'll be discussing apply to any market in any country. And you don't actually need to be located in the US to invest in the US markets and US companies. Okay, that's also another common myth. But what does matter is that you put in the work to learn how to actually make money investing. I want to put emphasis on work here because, again, we're not talking about a get-rich-quick scheme. We're not talking about an overnight success formula. We're not talking about any loopholes or anything like that. We're talking about putting in the time to learn the fundamental principles of successful investing, the same principles that people have been using for decades to create enormous wealth in the stock market. Now, you don't need to, make this your full-time job, your part-time job, or anything like that, but it is going to require you to commit yourself, to put in the time to learn this stuff. And if you do that, you can achieve all of your financial goals through investing. And maybe you want to get a new car, or maybe you want to go on vacation or provide for your family, or, enjoy some of the finer things in life, maybe go out on a boat, buy a new home. Or one goal that we should all share in common is being ready for retirement, whatever that means for you, because that's going to be different for all of us. So take a second here. Let me know what your financial goals are. Have you thought about this yet? You're here because you see investing as an opportunity to achieve something financially in your life, but have you taken the time to really crystallize what that is? What is it that you want to achieve? Because it's the first step in your success. You have to identify and crystallize what it is that you want to achieve. So do me a favor. Let me know in the chat box what some of your financial goals are. It could be short-term goals over the next 5 years, midterm goals between 5 and 20 years, or long-term goals 20 years plus. So go ahead in the chat box and do me a favor and let me know what your goals are. So are you ready to take control of your financial future? Because that's exactly what you're about to do. You're about to deliberately take some actions so that you can have better control over your financial destiny, right? So I want to make sure you are ready to do this before we dive into the meat of the subject matter here. So do me a favor and type in the chat box, I'm ready, let's go. Just give me something, guys. I want to make sure you're still with me and are excited to learn. Awesome, let's do it. I'm ready. Let's go, John. Okay, perfect. Thank you, guys. Appreciate it. Still some of you out there I have not seen responding. That's okay. Maybe you're a little sleeping right now, but you'll hopefully woke up in a little bit. But this is what my chat box looks like right now. You guys are excited and ready to do it, and you should be. So here's what we need from you. First and foremost, we need your undivided attention. All right. I want you to lock your phone in a drawer. I want you to close Facebook, close all your other tabs, close everything else. Don't switch to any other apps. Okay, I want anyone that is the opportunity to distract you, let them know you're busy. I want you to have an open mind and a positive attitude. I want you to forget everything you currently think about investing. Instead, think about your likelihood to succeed. Think about your goals. Think about what you want to achieve. Put aside all those limiting beliefs in your head, that voice that's telling you can't do it, and focus on the web class. And most importantly, I want you to commit to implement, okay? We're not here to waste your time or our own. You're only gonna get out of this what you put in, so we need your commitment to taking action, all right? I want you to actually use the information today, because knowing is not enough. You actually have to implement what we will be teaching you in order to achieve results. In fact, I need you to promise me that you're actually going to use this information, because if not, you're only wasting your time and our own. So type in the chat box for me right now, I promise, and we're not going to move forward until everyone has done that, okay? Awesome, I promise, pinky promise, perfect. Okay, go ahead, guys. I'll give you a couple seconds here. Type it in. I want you to commit to yourself, to taking action Awesome. All right. There's still a few more of you out there, but that's okay. We'll move forward. Hopefully you come around in a second, but let's keep moving forward. So who are we? My name is John Dunnicky, and I'm the director and co-founder of Clydebank Media. And Clydebank Media is an educational company. We predominantly produce nonfiction books and online courses and products to simplify complicated topics. And with me today, who's the actual stock market expert, is Brian Bonwich, and he's our senior finance contributor at Clydebank Media. Again, I'm just the guy helping him run the show here. So before we begin, there are just a few things we need to talk about. If you have tried to make money in the stock market before and were unsuccessful, it's not your fault. There are many reasons why you're not meant to be successful. These hot stock tips and get rich overnight programs are simply not designed for you to succeed. But do you know what is? This web class. Okay, this web class is designed exclusively for you to be successful. If you have been afraid in the past that you'll never be successful in the stock market, we are here to put those fears to rest. You can do this, and we're going to show you exactly how during the web class. And if you've been led to believe that in order to make real money investing, you need to be a Wall Street veteran, lucky, corrupt, you need to hire an expensive broker, well, I'm here to tell you it's simply not true. And that's exactly what the Wall Street elitists want you to think. That's exactly what these entire industries are based on. What we're going to teach you today can and will work for you, but are you willing to learn it? That's the real question. Okay, we can only take you so far. You have to be able to willing to take in the information and act upon it. So let's be clear on what this is not. This is not about getting rich quick, but what we will teach you can make you abundantly wealthy over the long term. This is not about paying to see someone else's trades, but what we will teach you will show you how to access the trades of the wealthiest investors in the world for free. This is not a list of hot stock picks that I'm going to tell you what to invest in. But what we will teach you will show you how to find smart investments before others do. This is not about learning a complex trading system that's going to require you to have a PhD in data science. But what we will teach you will give you enough information to analyze the small bits of data that actually matter. So before I hand things over to Brian, and so he can dive into the real meat of the web class here, we just need to run through some disclaimers. We are not financial advisors, nor are we trying to be. Okay, we're strictly an educational company teaching you material. Past performances are, of course, no guarantee of future results. We can't make any promises. We're just teaching you a system. What you do with that is up to you. And the content of this web class should not be construed to be an endorsement of any particular security, stock, ETF, mutual fund, etc. So here's the deal. What I'm going to be doing now is passing things over to Brian. He's going to dive into the meat of the subject matter here and really show you everything that you need to know as a beginner, show you what he learned on his journey from being an investing newbie to making thousands in profit from his investments in the stock market. And at the end, make sure you stick around all the way to the end because he's going to be giving you his stock selection tool, which is a blueprint or a step-by-step process for finding and identifying profitable investments in the stock market. He's going to be showing you how to use that. And at the end, he's going to be giving everyone a copy for free. So once he's gone through all that, he's going to pass it back over to me. And I'm going to point you in the direction of some additional resources to continue your investing journey if you're interested. However, you can use everything in this web class right after we're done here and hit the ground running. So does that sound fair to everybody? Does that sound like a good deal to you? Awesome. Perfect. All righty. So at this time, I am going to be passing things over to Brian. Brian, if you can hear me, please do me a favor and steal the presentation from me.
All right. The heist is in progress. I'm just going to get everybody onto my screen and we will begin right away. So yeah, I don't know how many of you got here by way of a video ad that you saw on YouTube or you saw on Facebook. I haven't really told the world an awful lot about me. I've done quite a few things in my life. Most of my professional life has been devoted to the craft of writing. And since I started working with John and the team at Clydebank Media, most of my writing has been in finance writing. However, it was not anything close to stock market when it comes to subject matter. It was couponing, Medicare, Social Security, very contained topics in the financial space. You see, for a long time, though I was interested in the stock market, my view of what the stock market really was a view of complication. So in my mind, the experts were these guys, the people who worked on Wall Street, who were really good at math, and who could decrypt this universe called the stock market. As far as holdings of my own, I had a retirement portfolio, an IRA account, which is basically just a brokerage account with tax benefits that I barely touched. And looking back on my performance, just in a 5-month stretch in 2015, you can see that the holdings I had were actually underperforming the market. Now, since I began working with Clydebank Media, there had always been buzz about doing a book on investing, and we did a few titles that were somewhat related to investing, a study on penny stocks and a simplified guide to options. And I was also interested in trying to learn a little bit more about what I could do personally to improve my results in the stock market, and maybe have a more active approach to my portfolio. So I made a trip to the local library and checked out a ton of books, and I spent about a week researching, going through all these books. And meanwhile, I was exploring the various tools online that you can use to find good stocks to invest in. Most of it I found pretty cryptic. I found that there was quite a stark lack of good beginner level content in the marketplace of ideas when it came to investing. Nonetheless, I decided to make a move and put what I had learned into practice, hoping for some better results. And unfortunately, those results never came. It was extremely frustrating. And it's an experience that I believe people who have tried to pursue business opportunities or passive income opportunities have probably gone through a lot. I mean, what you're told, I don't know if you have been through the whole college experience, but you're supposedly supposed to get this great education and a leg up on life, but then you're told, but brace for impact, you're going to fail. And this was one of those scenarios where I felt like, okay, I've done all the homework, but I still failed. And I'm wondering if there are people out there, you guys watching this class right now, who felt before that you weren't getting the results that you thought you should be getting. Is that an experience that you can relate to? Have you ever really invested your time and energy into something and not gotten the results that you thought you were going to get? My takeaway was, okay, I should just hand things back over to the experts. This is not my turf. Okay. So that was my conclusion, and it was the wrong conclusion. I didn't know it at the time, but something would happen over the next year that would completely shift my perspective and my fortune. And it began with this conversation here documented with John, where he's again wanting to do a book on investing for our brand, Clydebank Media, which means that it's going to be a simplified book, because what we focus on is simplifying the topics, and we try to compete with established brands such as The Complete Idiot's Guide to and For Dummies. So anyhow, that's the scope of our brand. I didn't think that investing as a title would fit our scope, or that I was personally prepared to do it on my own. John suggests, well, why don't we work with an industry veteran, and offers to set up a meeting. I agree. And that's how I met this individual, Ted Snow, certified financial planner who works out of the Dallas area. Now, Ted has 4 decades of industry experience in investing in money management. The first big piece of his career was spent with Fidelity Investments. He's currently established his own financial management service called Snow Financial Group, where he manages $50 million of wealth spanning 150 different affluent households. So Ted and I meet. I tell Ted that, look, my opinion of the stock market, I've already tried to learn it. My vision of it is not one that's simple and easy, doesn't lend itself well to a quintessential Clydebank branded book that simplifies the topic. It's all about, TV personalities that talk above your head and ticker symbols that are mostly meaningless to you. Heat maps, pie graphs, bar graphs, logs and tables that are incredibly complicated. And then charts that seem to be just blowing all over the place with the wind. And supposedly you're supposed to be able to pick out certain patterns that allow you to predict the future. And Ted's like, hold up, Brian, just take a breath, relax, and shut up for a minute. He says, your problem is simple. You've overcomplicated investing. Being successful is actually not difficult if you follow a few simple, time-tested, proven strategies. So interesting thought here from Ted. Okay, so maybe it's not as complicated as we're led to believe. What could he mean by that? Well, it turns out that Ted is not the only person who is a professional investor who has this opinion. Warren Buffett on the record says investing is not a game where the guy with the 160 IQ beats the guy with the 130 IQ. He says rationality is essential. And that's really the mystery at the heart of investing. When John showed you that slide earlier and said, if everybody knew this, why isn't everybody just partying the night away? And it's part of it is it's not taught. Part of it is also it's something that really it can be learned, but it's very difficult to teach. However, what we've done with this web class is I think we've cracked that problem. We're going to show you exactly what Warren Buffett means when he says rationality is essential, yet when it comes to raw intelligence, that piece is not so relevant. Rationality is essential. We'll be coming back to that, the challenge of being rational. So back to this story with Ted. I decided to give it a go, work with Ted on this project with a new perspective and an open mind. And what ensued in the work that Ted and I did over the next year was probably the best job perk that I've ever experienced in my career. I got to work for over a year, hours and hours at a time, during the days, during the weeks, during the months, phone meetings, Skype meetings, picking Ted's brain, talking to him about the stock market, learning what real investing looks like. And it was an incredible, transformative experience and an amazing stroke of good fortune for myself and my own personal finances. The product we created is something that I'm very proud of. It's called the Investing Quick Start Guide. It actually goes to market within the next couple of weeks. It's been through the FINRA compliance review. So it's going to be an accredited publication going to market very soon. But this web class is not so much about the book directly, but more about what happened in my experience and the lessons I learned. And through my time working with Ted, some very interesting things happened. My results in the stock market went from stagnant and failing to pretty damn successful. In fact, here are some snapshots of some ETF trades I made, which were one of many plays in the stock market that I made over that year that yielded a significant profit. These are pretty standard plays with some dividend reinvestments, some nice rapid appreciation of the stock value, and eventually taking profits at the right time. So, making money, not putting in a lot of work. It's, the passive income dream finally coming to fruition. And it's a lot easier than I thought it would be. Now, one thing that's really important, especially when you're out looking for advice on the internet and you come across all of these gurus and these traders that talk about flipping stocks and making thousands of dollars in a day and yada, yada, you want to make sure that, you're looking at the big picture. And the big picture is, okay, what did the investor or trader do over the long term? All things considered, wins, losses, and draws. And how did they do in the market compared to the market average? Because obviously anybody can look good in a very powerful, strong bull market, kind of like we currently have. So my performance trailing since from the 1st of January 2017 to the 30th of June 2018 is this measurement, is 26.2%, whereas the S&P 500, a broad stock market benchmark, returned 19.6% for that same period. So what this means is I'm coming new to the market and I'm beating the market by nearly 7 points, which is pretty exciting. And I believe it's only getting better. And what happened during that period of time while I was working with Ted and having these successes and building some significant passive income for myself is I began to gather a sense of confidence about the stock market and about my financial life and financial opportunities. Things that seemed kind of out of reach suddenly seemed doable because there was money in the bank. My wife and I traveled to Spain. John may have mentioned that we bought our first house a couple months ago. We're also inviting our first new family member that will be born this November. All very exciting stuff. And that's really what this is all about at the end of the day. It's about widening the field of opportunity through a kind of financial liberation and feeling like things aren't insurmountable. Not only can you cover your rent, pay your bills, and live without all that stress of how am I going to get by, but also you can expand the possibility of things that are within range for you, things that maybe you've only dreamed of doing or felt that they were out of range. Those things can become in range, in my experience. And that's what I'd like to show you how to do at a more technical level today. And to do that, I'm going to cover three very important secrets of investing. The first secret is how to outperform Warren Buffett and similar investors of the world without large lump sums of money up front. That's right. I said outperform Warren Buffett. And this is a secret where I invite you emphatically to be skeptical here. I want you to force me to prove to you exactly how an investor like you or an investor like me can outperform one of the greatest investors of all time. I want you to hold me accountable to that. That's secret number one. Secret number two, how to make money in the market regardless of fluctuations, even when others are running for the hills. Secret number two is going to be the most important if you're interested in building real expansive wealth, big time money, as opposed to just making a few bucks here and there and being able to do a few extra things or buy a few extra things. Secret number two is about breaking out of the middle class altogether and becoming simply a wealthy individual. Secret number three is how to put your portfolio on autopilot to generate passive income from stocks and make money while you sleep. I know a lot of you here are coming from a position of wanting to really crack the passive income code and get that passive income engine running for you. And good stock market investing is the perfect way to do that. That's what secret three is going to break down for you. Let's jump into secret one. So for starters, I'm going to come clean here. I'm not trying to suggest that I'm a better investor than Warren Buffett or smarter than Warren Buffett. Okay. That's not true. What is true, and Buffett will tell you this himself, is that when you don't have a lot of money, it's actually a huge structural advantage. What the heck does he mean by that, right? Now, what's also true and what illustrates Mr. Buffett's point here is that since I began working with Ted and learning Ted's system, I've been able to generate better return percentages in my own personal portfolio than Warren Buffett has generated in his Berkshire Hathaway holding company's portfolio. So maybe you're in a similar situation where you don't have a huge amount of capital to invest. So when Buffett tells you it's a huge advantage, you're at an advantage, your ears should perk up and you want to know what he means. So I'm going to unpack this for you by taking you inside more of my portfolio and going through one of my trades with you. Now, this is just an illustration, but it's an actual trade that I made last May, but it's here to illustrate a point. It's a company called DocuSign that I made a small investment in May of this year. And they are an IPO tech company in the systems of agreement business. They handle electronic contracts that can be signed over the internet that are legally binding, that expedite the work of the legal profession, the real estate profession, any business that needs lots of contracts signed by multiple parties that can be circulated efficiently, signed and legally binding. They have this proprietary technology which allows these systems of agreement to take form. Okay. It's a less than $10 billion market cap company. So it's not what you'd call a large company. It's an IPO. It's smaller. I made an investment in the stock at $43.30 per share at a time when analysts at Citibank were saying the price target for the stock was $58. So in other words, the reason I made this investment was pretty simple. I happened to be working in one of my brokerage accounts when an analyst report was published saying the price target was really high. And it was the first analyst report that was published since the stock's IPO. I decided to dip my foot in the water with a small 8-share investment. At that time, the stock performed nicely. I ended up turning a nice profit, a very quick 28% return in a few weeks. So nothing extraordinary here, but a solid play on a high growth stock that didn't take a lot of research. I was just able to capitalize on an opportunity that I knew how to recognize and take advantage of. Now, here's the point. While this play can be routine for investors like you or me, we see this opportunity, we can jump on it. Larger investors like Warren Buffett absolutely cannot make plays like this. Here's why. So first and foremost, the big reason is that there's no meaningful return available to a super investor, someone like Buffett who manages a $300 billion portfolio on a company the size of DocuSign, like an IPO that has a market cap, total market valuation of $10 billion. Even if Warren Buffett bought every single share of DocuSign on the market and got that same 28% return that I got, his profit would be about $3 billion in return, which is negligible to his total holdings of $300 billion. So he could have jumped on that opportunity and made a profit, 28% on that company like I did. And whereas that play for me can make a nice little bump in my total portfolio performance return and make me look like a better investor, make me outperform Warren Buffett on a percentage return basis. For Warren Buffett, it would just be a tiny drop in the bucket. Moreover, Warren Buffett is not seeking control over DocuSign. So if he made a Buffett-size investment in a small cap company, he's going to find himself being the majority shareholder of that company. And that means he's responsible for overseeing management of the company, hiring and firing the board of directors, determining the company's future direction, assessing its liabilities. He can be sued. He could be subpoenaed before Congress. Who's got time for all that? Whereas an investor like you sees an opportunity like this, you don't have to worry about any of that stuff because odds are you're not going to be trying to buy the entire company just so you can have a significant return on all of your assets like Warren Buffett would be seeking were he to make a similar play on a company like DocuSign. Finally, there's a volume problem for Buffett too. Once a big investor begins buying up shares of a small company, word on the street hits, the stock price is going to go up. So as they're still trying to find enough shares of their price target, it's going to be increasingly more difficult to find the shares they want. It's kind of like golf. if you start off and you're shooting 100, 110 in golf, it's easy to take 5, 6, 7 strokes off your game with the right instruction. But the better and better you get, the tougher it is to take off those additional strokes, which golf, incidentally, is something I've decided to take up. Now that I'm Mr. Wealth and Mr. Investing. So, but anyways, it's a good sport. It's a good sport. Let's move on. So anyways, I hope you guys get the point here that because of structural reasons, larger investors can't capitalize on the same plays that you have available to you if you only know what to look for. So there's a perfect fit for any investment size, whether you're working with a large amount of capital. I mean, Buffett can find plays in Kraft Heinz and Wells Fargo, most recently Apple Computers. So he makes investments, but they're in much larger companies. But the fact is, investors like you are going to have more flexibility and more agility than you'd have were you working with a massive amount of capital. In fact, Buffett has said on the record that if he could work with a smaller amount of capital, he'd guarantee a 50% return on his assets. In other words, he would outperform me. He's saying he'd blow me out of the water if he had a smaller amount of capital. But as it stands, I'm actually outperforming him, mainly because I'm much more flexible, much more agile. So the question becomes now, of course, what do we look for? How do we exploit this advantage? How do we make that money that he can't make? So back to this rationality issue. Let me get a drink of water. So if Buffett believes he'd be able to make better returns by investing in smaller companies, what we have to do is figure out how he would select these smaller companies, because I don't know if it's possible to always catch the analyst report at the right time. I was just kind of lucky with that DocuSign play. And being lucky is good. Being lucky and being good, they're not totally mutually exclusive. They kind of feed off each other. Once you get in the zone, things just sort of snap into place. So, but here's the deal. What we can do that's incredibly powerful right now is we can start looking at what Warren Buffett and other super investors currently invest in. And that includes hedge fund managers, pension fund managers. That information is actually publicly available. I'm going to show you something amazing right now. It's called SEC filings, 13F filings. You go to the SEC website, sec.gov, and find filings that tell you what the big players bought and what they sold. This is crazy. This is a fantastic opportunity to pick the brains of some of the best investors on the planet. So these forms are required to be filed by the super investors. Anybody who has over $100 million in qualifying assets in the market has to file a 13F every quarter. So anyone out there up for some whale watching? If you're up for some whale watching today, if you want me to show you how to hack into the minds of the world's best investors, type in, "Let's go to the ocean." Let's go to the ocean. If you're up for whale watching today, type in, "Let's go to the ocean." And we're going to hack into the minds of some of the world's best investors. Yeah, we can also go to the beach. Sure. Yeah, we can go island hopping. So kind of an obscure World War II reference there. All right. I'm seeing a lot of people ready to pack their swimsuits up, their beach towels, and we're going to go to the ocean and we're going to start watching the whales. All right. So the thing about the sec.gov website is that it's a little bit convoluted, complex, but luckily there are a lot of various websites out there that simplify this data and compile it in a digestible format. You'll find like this website, whalewisdom.com, gives you what the 13F filer bought, what they sold, and what the current portfolio holdings are. Good freaking information, right? Here's Buffett's portfolio, Berkshire Hathaway. You can see his holdings. He sold some of his Wells Fargo. He's got Bank of America, Apple, Wells Fargo. He's a blue chip investor. At least he is now, because he is forced to be investing primarily in large cap companies. So I want to tie all this together from what we know so far. What we know is that Warren Buffett is telling us he'd make more money if he could invest in smaller cap companies working with smaller amounts of capital. And two, we know we have this amazing ability to hack into the portfolios of the super investors and other institutional investors. So what do we do with this information? How do we take this information and get ideas for buying stocks? What's our strategy? What's our idea? That's always the eternal question of the investor. Well, listen, one idea is playing right in front of your face. Copy the investments of the super investors, particularly with value investors, people who invest long-term like Warren Buffett. If you look at his play on Apple in the spring of 2018, now he's not trying to capitalize on short-term price action of stocks. He's looking for companies that are going to be successful in the long run. So even though these 13F filings are published on a quarterly basis, if we had bought Apple as soon as the information was released to the public that Buffett was buying Apple, we would be sitting pretty with a like 20-25% return. Since Buffett's investment, Apple has surpassed $1 trillion in market cap. We'd be doing quite well. So that's a pretty simple approach. And that's actually an approach that there's academic literature published that say if you just follow the wisdom of the super investors with their teams of researchers and their analysts and their years of experience, that you will reliably return profit on your investment. There's academic literature that says as much. So right away, you're profitable. You're profitable, easy. But I think there are more strategies that we can use from this position. And I think we shouldn't settle for just equalizing and doing just as well on a percentage return basis as super investors. Odds are they don't need the money as much as we do. So let's exploit our structural advantage and do one better. This is a strategy I call downstream investing. So for example, take Apple Inc. I'm sure you've heard of it. Most recently purchased by Berkshire Hathaway, as you can see in this slide. Last quarter, they increased their holdings in Apple Inc. I think from 0 to occupying about 6.6% of the entire Berkshire Hathaway portfolio. Huge investment, 74 million shares of Apple purchased by Berkshire Hathaway, which now, as you know, these are market cap values here for these companies. Now, as you know, market cap for Apple is surpassed $1 trillion, the first stock in history to surpass $1 trillion. Great. If we'd invested in it, copied Buffett, great. We would have made some money. But how do we make even more money? How do we beat Buffett, as I promised you we would be doing? It's called downstream investing. So what we do is we take Buffett's prediction that Apple is going to do well, and we look at companies that are poised to benefit from Apple's advantage. However, we look in spaces that are more dynamic, smaller cap opportunities, the kind of investments that Warren Buffett wishes he could make. Companies like Cirrus Logic with a market cap of $2.26 billion. Warren Buffett's not going to go near it, even though he may think it's a great investment. This company is called AMS AG, another supplier, a parts supplier for Apple, $7.45 billion market cap, and Skyworks, $17.79 billion market cap. Companies that are so small that larger investors cannot invest in them for structural reasons. Now, I'm giving you a very simplified rendition of this tactic and how to generate ideas. There are countless ways you could implement this downstream investing strategy with very different companies. Depends on what company you're looking at. You could look at the various financial statements of similar smaller cap companies or part suppliers for these larger cap companies and look at similar income statements, similar balance sheets, and say, okay, which small cap company has a similar financial record in terms of, what their profit margins are, what their business model is, what their, debt to asset ratio, some simple metrics that you can learn and basically find these large cap companies in a smaller version. And then you've got sort of the economic intellectual muscle of the Warren Buffetts of the world informing your decision about investing in a company with more aggressive growth potential. So you get a few ideas, and then you drill down on each of these companies and you do some research and you say, all right, what do I want to own? Does this sound like a strategy that could work for you guys? Does this sound like something that you could learn, that you could do? You generate some ideas, you reverse engineer the wisdom of the masters. And I'm even going to provide you with an additional resource, the stock selection tool, which is a decision tree flow chart that will show you how to generate the ideas and get a basket of stocks to look at. And then the last page of this chart is an individual stock breakdown where it shows you the exact ratios you need to look at for each individual stock, so you can generate a basket of ideas, some potential stocks, a short list, and then analyze them piece by piece, and then find the one that you want to buy that will hopefully, remember, nothing's guaranteed in the world of business and investing, but will have a damn good chance of returning a good return for you and making you money, surpassing the return percentage that Warren Buffett gets from his large cap investments. Does that sound good to you guys? Does that sound like a plan? Something you can work with, something you can learn, something that's worth taking the time to learn? So, or you could always just copy the investments of the experts and settle for that 20%, 25% return. Nothing wrong with that. Nothing wrong with that. But I think the fact of the matter is that we have every right to demand better returns on your dollar than Warren Buffett has, than Warren Buffett gets. We should. I mean, for Warren Buffett, his benefit is he gets to claim he is the greatest investor of all time if he can return as high a percentage as possible. He has no financial need. I doubt he has any dreams that are hung up on money. Money does not limit Warren Buffett from any activity, but I bet some of you guys out there, money is a limiting factor. And that's the transformative power of this web class today. And what I'm trying to break you guys out of is life is too short for money to be a limiting factor. You want to be able to control your business, control your bills. When I say your business, I mean your personal business, your bills, take care of your family, be prepared for a financial emergency. Step one. Step two, if you want something, if you want a brand new car, if you want a new Tesla, if you want a boat, I don't know what your dreams are. If you want to go on that dream vacation, then you should be able to put together a fairly simple plan that will get you there in a reasonable amount of time. Okay. So I used to think that it was impossible to get anywhere in the stock market unless you began with a large lump sum of money. But thanks to this opportunity I had to work with an investment pro, Ted Snow, learn a whole lot, I eventually was shocked by what's possible, even with working with very small sums, even with beginning with very small sums. So this system contains entire strategies built around targeted small dollar investments, the type of investments that exploit opportunities and structural advantages that these larger investors like Warren Buffett wish they could also exploit. That's the beauty of the stock market, is it's infinitely scalable. And so many things in life, it seems like you need a whole lot of money to make money. The stock market, because it's infinitely scalable and because there are a ton of stocks available that you can get for under $100 per share, because there's fractional investing available through a multitude of services that allow you to buy fractions of shares, you can scale down. You can find those companies that you know are going to give you a good shot at a good return. You can invest in a handful of them. The idea is you're going to win more than you lose. You're going to take a profit. You're going to put together a plan, and you're going to do well. You're going to start your road to wealth. And there are opportunities available for everyone. So I think one of the reasons there's this myth perpetuated that you need a lot of money to start investing is because of the important distinction between investing and trading. So investing and trading are not the same thing, okay? When you're trying to trade stocks, flip stocks, you have a lot of headwinds, namely taxes and trade commission costs, and also the fact that you're working with a less clear system. You're trying to predict short-term price action of what the market is going to value a stock day by day, hour by hour, week by week. Whereas investing, you're looking at companies, you're investing in good companies. And evidence indicates that an investment of less than $50,000 will significantly impair a day trader from making a profit. The key word here is day trading. We're not even talking about trading. We're talking about investing, which is totally different from trading. So I'm sure many of you have seen the ads from the traders who talk about, you need to copy them, buy their products. because they know how to read charts and they're just killing it in the stock market by just making these predictions. And I don't know what's true and what's not with these guys, but I do know that when it comes to making people independent, not having to subscribe to, trading picks from a guru who's going to charge you thousands of dollars a month to follow his trades, but instead of doing that, teaching you how to fish instead of giving you a fish. If you heard that phrase, teach a man to fish, feed him for a lifetime. Give a man a fish, great, feed him for a day. Teach a man to fish or a woman to fish, feed her for a lifetime. That's what we're interested in doing. Okay. So yeah, the reason that myth is perpetuated, that you need a lot of money to get results in the stock market, is mainly the fault of this whole trading dimension of the stock market. Investing, what I do, what Warren Buffett does, what the real wealth creators do is very different from trading. And again, this is not about IQ. With trading, yeah, you need a little bit of a what they call quant knowledge. A lot of traders are kind of like kind of a prodigy, kind of weird, kind of quirky, which is fine. It's great, but it's not something that's easily taught. What we're talking about doesn't require any kind of specific IQ. You can find great investment opportunities simply by looking at those 13F filings, taking cues from the experts, reinvesting your dividends, which we'll talk about in Secret 3, and doing a lot of simple steps that anybody can learn and do if they have the right information, if they have the right things shown to them, like the kind of stuff you're seeing and learning here right in this web class. So guys, I'm going to ask again, do you think if you took some time to learn some of these techniques in a little more detail, worked with a stock selection tool, that you could have success in this? I want to see everybody say, I believe. If you're still here, I want to make sure you believe that you can do this. So type in, I believe, in the chat box. Because if you don't believe in yourself, then I don't know why you're still here. And it ultimately comes down to you. It ultimately comes down to you taking action and doing this stuff and really making it happen. And, I'm going to do all I can. John's going to do all he can to show you the way, but ultimately it's up to you. So I want to see, I've already got, I don't know, maybe the 35, 40, I believes. I'm sure there's more out there. Type in, I believe, if you want me to continue to secret number 2. I'm just going to hang out here until I got to at least see 50 more, I think. At least 50 more, if not more than that. Okay. All right. Chat log is pretty stacked. Chat log is, I'm not going to take the time to count all these. I'm going to assume all of you guys have said that. And otherwise, you shouldn't even be here if you don't believe that you can actually do this. Something else I'll say on the subject is starting less can actually be good for beginners, because a big piece of learning how to do this the right way is to act with discipline. And when you start with less money, some of the psychological challenges, the stocks go up and down, but if you make the right play and you believe in it, you hold tight once you invest in a business that you believe in. But if that stock starts going down, you're going to have the discipline to not freak out. And I think a good tactic is to start with less money. And that way that psychological impact won't feel as severe. You won't feel as stressed when the market gets volatile, and the market does get volatile. So the reality is you can succeed in the stock market without starting off with a large lump sum of money. So speaking of volatility, this is secret number 2. This is about panics, the crash. One of the big questions we always get is, what do I do about the market crash? And secret number 2 is critical to the approach that Ted taught to me. It's one of the most psychologically challenging elements of the Ted Snow system. But at the same time, it can be the most rewarding. So I want to show you something. This is actually, I think John may have shown you this. It's a very long-term view of the Dow Jones Industrial Average since 1910, right? And there's 2 major trends that I want you to pick up on here. So you can sort of see the history of the U.S. economy in this Dow Jones Industrial graph. You can see the roaring 20s, the 1929 stock market collapse, the Great Depression, growth in the 50s, stagnation in the late 60s and 70s, oil shocks there in the mid 70s. You can see the expansion and growth of the 80s. You can see Black Monday 1987, when the stock market lost something like 40% of its value in a single day. You can see, actually, that's right here. You can see the expansion of the 1990s, the dot-com bubble bursting right around here. And you can see the Great Recession right here at the top. That Great Recession, one of the biggest financial pullbacks of all time. Look at that. What is that? It's a blip. It's a blip on the radar. The Great Recession of 2008. So, but what do we see here? There's two big patterns. One is up and down volatility. The other big pattern is enumerated by this dashed line right here and this solid line going right through the center. And that is this persistent upward trajectory mapped out and calculated. We're looking at a little over 7% growth on average per year, 7% growth, sufficient to outpace inflation, which is average of about 3%, 3.15%, I believe. Okay, so 7% growth in stocks, sufficient to outpace inflation. This is why retirees use the stock market, because they recognize this persistent trend. So if you look at a shorter time frame, a couple decades or 3 decades, you'll see from 91 to 2018, the similar trend asserts itself in this broad market index measurement, the S&P 500, volatility yet persistent upward growth. You can also identify bear market periods here and the nature of the bear market. They usually last for about 3 years. Stocks go down, they become significantly undervalued. The Great Recession bear market was, of course, slightly more dramatic, but even the dot-com bubble and the bear market that followed, stocks get cheap. Stocks get cheap. But what do we know? We know that the market has a 100% historical track record of recovery, and not just the US market. This is a global phenomenon. Markets historically recover. And if you think about it, you could probably figure out why. I mean, the pace of innovation continues. People are born, people contribute to the economy. We're able to do more and more with less. The world becomes more integrated. We're able to integrate trade. The internet integrates us, and other communication systems in the past have integrated our ability to work together to achieve more economic value. So of course, the natural progression of the human productive engine is going to increase. And then, of course, artificial intelligence will add a whole new dimension to that. Now, what does all this mean? So we're going to go back to our friend Uncle Warren here, and he's going to tell us exactly how to become rich, the secret to becoming rich. He's going to take you into his office and close the doors, sit you down, because that's why you're here, right? You're trying to figure out how to make money in the stock market. Well, Warren Buffett's going to tell you, all right? He's going to tell you point blank. He says, be fearful when others are greedy. Be greedy when others are fearful. Okay? That's it. That's how to do it. It's a very well-known quotation by Warren Buffett. The message is simple. And again, harkens back to what John was talking about. Well, if everybody knows to buy stocks in the down market, why doesn't everybody just do it and make a lot of money? That is the question that you guys need to think about. And the answer is that even though this is a simple message, the challenge of rationality is a real challenge. If you've never been under the gun in a panic situation, in an aggressive bear market, a financial panic situation, similar to what we saw here, you don't know how safe your money is, what you worked your entire life for. How safe is it, right? Is it all going to go away? If you've never been under the gun, then you don't understand the extraordinary strength required to preserve your discipline in the face of panic. How do you come out filthy rich when there's blood in the streets? And that is the time when the super investors, who's the guy that not Charlie Munger, but Templeton, Ed Templeton, I think, says that's the best time to buy is when there's blood in the streets. But how do you psychologically steel yourself for that moment, right? So Ted Snow offers this very powerful and extremely useful, it's been useful for me, approach. It's like a mantra, really, to handling this emotional challenge. And Ted Snow's take is that we should practice buying into weakness and selling into strength. And that's something that can be done not just in a bear market, but during the bull market too. When you see a stock go down, you want to ask yourself why. When a stock you hold that you believe in has gone down, your first question to yourself is not, how do I get out of this position before I lose any more money? That's a good question, sure. But your first question should be, a stock that I bought into went down. I did my due diligence. I researched the company. I liked the company. I liked the stock at the price it was being sold at. The stock price is now down. Should I buy more and lower my total cost basis in the position? That should be your first question. That's part of the training on how to do this the right way and how to preserve this rationality that ultimately leads to success. Let's just take a quick random selection of some of the most well-known blue chip stocks, some of the biggest, brightest brands that you've probably ever seen in the stock market. Nothing fancy here, no small cap downstream investment plays, just standard blue chips like Apple, Ford Motors, Merck Drugs, Bank of America, Delta Airlines, right? What if we had just bought 100 shares of each? Very simple, low rent play in January 2009, the heart of the Great Recession, right? And all we did is buy blue chips. And by this time, by summer 2018, our portfolio is up staggering 500%. About $7,200 to $35,000, staggering 500%, a phenomenal return on investment, phenomenal. And we didn't do anything but buy blue chip stocks. Nothing fancy here. No real work involved. We just bought some good, strong, big companies, boring investments, and we made a ton of money. Imagine what would have happened if we had picked some more aggressive earners, some more aggressive stocks. So if you're interested in doing not just well, but really well in the stock market, if you really want to do more than just have a little extra money, but if you want to break out of the middle class and completely transform your life and just make that change upward, then you have to be greedy when others are fearful. You know, being rich is not going to solve all your problems. I think Warren Buffett and a lot of people who are rich know that your problems don't just go away. They just change when you have a lot of money. But if that change is something you're interested in, then this secret right here, the idea of buying into weakness, is super, super important. And it requires an attitude shift. Change begets change, right? You're going to have an attitude shift to be able to train yourself to take advantage of the enormous opportunities that are brought about by a down market. Now, the down market is a reality. It's going to happen. You have to accept it and you have to embrace it. And that takes discipline, practice, and commitment in the near term, because you will take losses. Everybody takes losses and no one can predict the exact top and the exact bottom of the market. There's indicators you can look at, and there are preparations that you can scale upward as these indicators take shape. For example, the inverted yield curve, or the differential between the yield on the 10-year treasury bond and short-term treasury issues, which has been closing, flattening, and may invert soon, even within the next few months. Now, I'm probably getting a little bit above your heads here, and I don't want to continue down that rabbit hole right now because we are working with a very limited amount of time. But what I'll tell you point blank, what I'm doing as I see the indicators of a recession develop, I divert more and more of my assets into what I call my down market war chest. Components of the down market war chest are listed here. The purpose of the down market war chest is to provide you with maximum opportunity to capitalize on the down market when it hits, to invest in the weakness, and to be greedy when others are fearful. It's basically an engine of greed that you cultivate and deploy when there's panic. All right. This is your prep kit for you preppers out there. This is your food supply. It consists of cash, secure bonds, real estate investment trusts, defensive stocks like oh gosh, what's the one? The food supply company Cisco is a great defensive stock. Cisco, stocks that you just look at that have very low beta. I don't know if you guys know what beta is, but it's a measure of the volatility of a given stock relative to the general volatility of the market. Again, I don't want to get too far in depth here. We are definitely running out of time, and we're only halfway through secret number 2. Defensive stock stop loss orders, which allow you to lock in profits that trigger an automatic sale. When stock price falls below a certain level, you automatically get out of the position. It converts into cash. Short positions, which allow you to profit on the downward movement of a stock. Take a short position when you think the stock is going to go down. So ideal for the bear market. There are even bear market mutual funds that specialize in making profit during a down market. And you could build a position in one of those mutual funds as well. And options contracts, of course, which are contracts that give you the right to buy or sell a stock at a certain price within a certain period of time. So if you can predict down market movement, the right options play can definitely help you mitigate risk of a down market. So I don't want to get too deep into this right now. John will come back in a few minutes and tell you about taking some next steps to develop your skills at investing. But I want to keep things very simple and very usable right now. And the best thing I can tell you at a broad level is to understand what the nature of the bear market is. When the market goes down by 20%, the analysts say, all right, we're in a bear market. That's bear market territory. The market's gone down by 20%. We're in a bear market. The average total decline for a bear market is 40%. So generally the total market, total value of the stocks across the board, they're going to go down by about 40%. That's how you know we're in the bear market. And probably at the bottom of a bear market is around 40% decline. So you want to buy on the way down, and you want to buy a lot at that 40% level. You want to buy a lot at that 40% level. And then when the market comes back up, you're going to find yourself in some serious money. So again, discipline is key. It sounds great now when I'm telling this to you that, yeah, sure, you can do this. It's not that complicated, and it's not. But emotionally, rationally, your ability to behave rationally, like Warren Buffett told us in secret number 1, is so much easier said than done. Discipline is key. I can't emphasize this enough. Okay. One way to think about a down market that helps you with the emotional element is that a down market doesn't turn bad companies, good companies into bad companies, nor does it turn bad companies into good companies. Companies still make profits, still pay dividends, still attract great talent during these bear markets. Guys, the leaders and the great employees of the world's best companies, leaders like Jeff Bezos, Bill Gates, Elon Musk, Mark Zuckerberg, they don't just go home and sleep or go on vacation because it's a bear market. No, they may do some restructuring. They may focus on cost cutting. They may have to work with less top line revenues coming in, but they don't stop being who they are. They're great leaders running great businesses. The only real substantial difference is the stock is on sale. So what you're going to do is you're going to counterpunch your way to success. I used to think that when down market hits, yeah, it'd be great to be able to buy a whole lot of stock in a down market. But I thought only really rich people could do that, that there's no way for ordinary people to profit, because ordinary people in a bad economy are worried about being laid off. They're worried about inflation, the price of groceries getting high, the price of gas getting high. Who's got time to buy stocks? But that's when, but now I know that if I follow this strategy, develop the skill of buying into weakness, build my down market war chest, and realize the incredible value of creating a plan for myself in the good times that I can use to not only survive, but thrive in the bad times, then I'm going to be prosperous. And this is, you won't believe how good it feels to be prepared for virtually anything the market throws at you, to know how to roll with the punches and then counterpunch your way back to success. It's something that I've practiced that's actually made me a lot of money, even in the short term, even in the bull market. This strategy here in Secret 2 has made me a lot of money because I know how to stay disciplined and trust my investment instincts and trust the plays I make. Let's move to secret number 3. This is where we're going to talk about passive income and how to put your portfolio on autopilot and generate passive income from stocks and make money while you sleep. Sounds good, right? And it is. I'm going to jump into this, but before we get too far, I think it's important we discuss what exactly is meant by passive income. The best way to do that is to define it in terms of active income. Of course, passive income and active income are opposites. So active income is trading your time for money. Nothing wrong with this type of income. If you have a good job, a good salary, awesome. Awesome. It's nice to have a good job and a good salary. Passive income is making money without trading your time. Now, here's the thing about it. People don't get wealthy through active income. They may be rich if they have a big salary, but they don't get wealthy. What do I mean by that? Warren Buffett, he says this: if you don't find a way to make money while you sleep, you will work until you die. And this is true regardless of whether you have a multi-million-dollar salary or whether you have a $25,000 salary, okay? So pay close attention, because the next thing I'm going to tell you is very important. And then I'm going to show you why it's true. Here it is. Passive income is synonymous with wealth. People don't become wealthy by trading their time for money. Your salary is not going to make you wealthy. Okay. I'm not crazy. Listen, people become wealthy by owning assets like investments, like stocks, like real estate, that actively appreciate in value. And the brightest people on the planet realized this a long time ago. And in my opinion, are making a statement about it. The statement here: big salary, about $1.68 million a year for Jeff Bezos, CEO of Amazon. Great salary, but look, it's virtually meaningless compared to his net worth of $139.6 billion, a net worth that is derived from his heavy investments in Amazon stock, of course, and other assets I'm sure he owns that actively appreciate in value. Warren Buffett drives the point home even further with his $100,000 a year salary. Pretty modest Omaha, Nebraska CEO salary, but a net worth of a staggering $80.6 billion a year. What is that? Like something like 8,000 times his salary. Nuts. Mark Zuckerberg drives the point home right smack in your face by giving himself a $1 a year salary, because he knows that the root of your wealth is not your salary, it's your net worth. Okay. So where does all this hit home? You may be thinking, great for Mark Zuckerberg, he can take a $1 a year salary. Good for him. I'm not in that position. Why is this relevant to me? It is. And here's why. Okay. This slide is one of our wordier slides. I'm going to read it very slowly. The exponential wealth creating power of passive income is not limited to the very rich. So you may have never met Jeff Bezos or Mark Zuckerberg, but I guarantee you there are people in your town, people you see, maybe people you even interact with regularly, who have incredible amounts of passive income through their investments. In fact, they could be living right next door to you. In 1996, American writer and business theorist Thomas Stanley published a book called The Millionaire Next Door. The Millionaire Next Door is actually one of the many books that I checked out when I began to take a more active interest in investing. And this one really stood out to me. I really enjoyed it. And one of the key findings that Stanley found was that higher salary often does not correlate to higher net worth. He found that doctors and lawyers, relative to their salaries, have lower net worth when compared with teachers, professors, engineers, and people working in traditional lower salary positions, people who were not in the elite professional classes. He found that these teachers, the people that John showed you at the beginning of this lesson, the janitors, the blue collar professions, and lower salary professions across the board, could amass incredible amounts of wealth, net worth, relative to their salary to net worth ratio, more similar to the richest, smartest, brightest people in the world, like Bezos, Buffett, and Zuckerberg that we just showed you earlier in this secret. Really perked my interest because my wife is a teacher. I'm a ghostwriter, not super high salaried positions, but our net worth is impressive because we budgeted, we saved, and we invested. Okay, so could we be the millionaires next door that Stanley is talking about? Well, that was his conclusion. Exactly what Thomas Stanley found that was so critical is not that you have a huge salary, but that you save and that you invest. And that the investment piece is where people like me and people like you guys can tap into the incredible power of passive income and build a financial reality for yourself that's even more abundant than your typical lawyer or doctor. Again, a little bit of discipline, a little bit of knowledge, a little bit of help and support, and you're there. And I want to show you I wanted to kind of open the hood here and show you why this is true, show you how the this amazing force of compounding works and how you can compound your income in the stock market with dividend yields by investing your dividend yields. So some of you may know what dividends are. Not all stocks issue dividends, but a lot do, especially the larger cap value stocks like a Coca-Cola company has a 3.56% dividend yield. The ExxonMobil Corporation close to 4%. Kraft Heinz Corporation squarely on 4% for their dividend yield. So for those of you who don't know what a dividend yield is, it's a payment issued by a company to its shareholders simply for being shareholders. So the price of the stock may go up, it may go down. Companies will still generally pay out their dividends to shareholders. Why? Because paying out dividends attracts more investment. Companies that depend on the public to provide them with capital want to attract more investment. They're competing with all the other companies in the public marketplace for your money. Okay, so they want to issue dividends to make that investment more attractive. Now, I want to talk about dividend yields here because it's an easy way to understand the mechanics of how many, many wealthy individuals have compounded their wealth in the stock market and created powerful passive income engines. So the idea here is that a good dividend strategy in the stock market is going to allow you to play with the house's money. What does that mean? It means that you're going to be reducing or eliminating your risk, which is huge in investing, risk management, especially when you can reduce or eliminate your risk. So playing with the house's money means you're going to reduce or eliminate your risk while steadily acquiring even greater potential for gains. I'm going to break this down for you here in a second, so just stay with me. All right, so a little over 10% of the money I've made in the stock market has come in the form of dividends. And for a large portion of time, I authorized my brokerage to do something called automatic reinvestment. In fact, some of the trades you saw that I showed you from my portfolio earlier in this class, one of the reasons that the profits were so high, even though the initial investment was relatively low, was because of automatic reinvestment of my dividends. So automatic reinvestment simply means when the dividends are paid by the company, I authorize my brokerage to automatically reinvest them back into the stock, thereby purchasing more shares of the stock and doing something called lowering your cost basis. Now, cost basis is a kind of fancy term that it's like investor jargon, but it really is a very, very simple meaning. Cost basis ultimately means the amount of money that you've paid to own shares in a stock, or cost basis per share is your total amount of money paid to own shares in the stock divided by the total amount of shares that you own. Now, when you have your dividends going back into your stock, your dividends being used to buy more shares, then you're not handing over any more money to buy more shares of stock, yet you are getting more shares of stock. The company is basically buying their stock for you through your automatic dividend reinvestment. What does that mean? It means that your shares go up, but you're not spending anymore. So your cost per share goes down. No money is coming out of your pocket, yet your share count is going up. Therefore, your cost per share is going down. Your cost basis is lowering. Meanwhile, because you now have more shares at a lower cost per share, if the stock dividend is retained, and companies hate to cut their dividends, then these shares will generate even more dividend payments, even higher dividend payments, which can be reinvested for even more shares. And the cycle repeats itself. That's the phenomenon of compounding that Einstein called the eighth wonder of the world. And that's the engine, the pistons really, that build wealth. Imagine, if you compound at a good rate of investment for a period of 6 months, a year, or 5 years, the more time you commit, the more exponential will be the compounding effect. Now, if the value of the stock goes down, okay, then your 4 or 5% dividend yield actually may increase because dividends are simply a dollar amount pegged to a share. So the company says, all right, our shares sell at $50 per share. We're going to give our investors $1 dividend per share. $1 dividend per share. So at that point, the rate is what, 20%? No, 2% dividend yield. If the stock goes down, the dividend yield percentage goes up, because dividend yield percentage is dividend dollar amount divided by share price. So the actual dollar dividend is constant. Dividend yield fluctuates with the share price. So yeah, some dividend payments may be less than others, but generally companies hate to cut their dividends. So this is yet another example where it's not, it's not something that doesn't require any work or any patience. But the beautiful thing is that the odds with this opportunity, unlike so many other opportunities, are in your favor. This is a reality-based approach to wealth building that will work for you if you follow a few simple, time-tested, proven steps. Remember, most stocks recover their value. Companies hate to cut dividends. Markets as a whole, as we learned in Secret 2, historically always recover their value. So once again, you can see here, you are running with the wind at your back, with the odds in your favor. And that, my friends, is why, we believe in this approach to wealth building like we do, because it's a system that is not rigged against you. It's a system based in reality where you don't have to be really rich. In fact, you have a structural advantage by not being really rich. It's also quite quintessentially the difference between gambling and investing, the odds, right? In gambling, there's a tiny edge for the house. In investing, you are the house and then some. You are the supplier of capital. They need your capital, and they're prepared to reward you handsomely for it. You just need to know what to do, okay? So let's recap what we learned. Secret number 1, you don't need a lot of money up front to become a successful investor. Secret number 2, down market, bear market opportunities are great for wealth creation. They're the key to totally breaking free of middle class. 3, passive income is the foundation for wealth building, and dividend yields and price appreciation allow investors to build engines of passive income. Guys, it's been great sharing this time with you. I hope you picked up a whole lot, and I'm really pulling for you. John's going to jump on here now and tell you about some next steps and some really cool opportunities. So stay tuned, and I hope to see you guys again soon. Talk to you again soon. Bye.
Hey everyone, it's John again. Make sure my mic is actually working. If you can hear me, do me a favor and just type the number 2 into the chat box right now while I go ahead and share my screen. Number 2, please. Thank you. Perfect. Awesome. All right, guys. That was quite a lot of information. So before, we move forward here, I want to go ahead and take a second to thank Brian. Like I said, I'm not the expert. I'm with you guys in this boat, learning along the way. And I think he did an excellent job of recapping some of these, real core principles of successful investing and really destroying some of those common myths we had. How many of you are excited about what Brian just shared with us? Do you think that if you followed what Brian taught you today, that you could start to make money in the stock market? I mean, that's kind of why you're here, right? I mean, we wanted to give you the opportunity to learn some of this really valuable information, these fundamental principles of successful investing. But it's not just about learning, right? It's about utilizing that information. So do you think you can utilize that information today to actually implement it in your life and see results? More importantly, how many of you are feeling a little overwhelmed because we've covered so much, right? Listen, if you're an absolute beginner to this stuff, then there was a lot of information that you've probably never seen before, words you've never heard before, and it doesn't matter how great of a listener you are, and I'm sure you did an awesome job listening and taking notes, and it doesn't matter how great of a presenter Brian is, and he did an excellent job kind of breaking this information down and simplifying it. There's just simply a ton of information in a short period of time. So maybe you feel like this, right? Maybe you feel like you're drinking out of a hose. So here's some examples of things we didn't get to cover today, because honestly, there's, although we covered a lot, there's plenty more to this. There's much bigger picture of here, the overall holistic approach to using investing as a vehicle to achieve your financial goals. Just like some examples, creating specific plans of action to achieve your financial goals through investing, evaluating individual stocks using simple to understand processes and systems, how to shield yourself from risk to protect your investments, how to interpret the bond market, how to manage and rebalance your portfolio, how to take advantage of existing tax laws to maximize returns, and how to chart a course for true financial freedom using the power of investing. So again, we covered a ton today, but here's just a little bit of some of the things we didn't get a chance to review, which we would love the opportunity to be able to talk to you about. But simply, we'd be here all day and all night long if we wanted to do that. So we wanted to give you two options at this point. The first option is take what you've learned today, take all the information and the actionable insights, and go forward on your own, chart your own path, which is an absolutely very noble approach. If you're that type of person and you'd rather take this information and go forward by yourself, then by all means, you have the power to do so and the knowledge now. But we wanted to give you a second option if that's not what you'd like to do. We wanted to give you a more customized option where you can follow a comprehensive training program and expand upon what you've learned today with a complete over-the-shoulder system developed by Brian, and get Brian's direct assistance to help you achieve and oversight to achieve their financial goals and implement some of the things we've been talking about today. So what we've done here, and please don't adjust your monitors, this is meant to be blurry. What we've done is Brian and I have sat down and made a list of everything we thought we could create that would assist somebody going from an absolute beginner in investing to being able to see real results and achieve the true financial goals that they have set out for themselves, both short, midterm, and long-term goals through investing. So we sat down and said, what's literally everything that we could provide, everything that we create, all the support that we could give to somebody and able to enable them to do that. And what we've done is gone forward and created all those products, provided all those services, and packaged them all together in what we call a bundle. And that's kind of what we're seeing right here. But the reason it's blurry is because I don't want to share this with you guys if you're not interested in seeing it, right? So if nobody wants to see this, if everyone wants to take option one on the call today, then you don't really need to worry about this, right? You don't need to, I don't need to spend my time showing it to you if no one's interested. So please go ahead and do me a favor right now. If you are interested in seeing this, if you're interested in seeing what we have as a part of this bundle that Brian have created, go ahead and let me know in the chat box. Give me some feedback. Tell me to show it. Let me know you're interested. Awesome. Show it. Please show it. Let's do it. Okay. Awesome, guys. All right. Enough of you seem interested, so let's do it then. Let's move forward. Talk about what we've done here. So again, everything that we've created as part of this package, what we call the Investing Quick Start Guide Bundle. And what we're going to do right now is go through and show you each of the pieces of the bundle here. So the first element, and the largest in many ways, is the Investing Quick Start course. And this is an online self-paced training program hosted on our campus, on our online campus, that will guide you through the actual setup, implementation, and following through on what a lot of what we talked about today, essentially how to use investing to achieve your financial goals. So right now there's over 10 plus hours of video, HD video content. It's an online course that's accessible on all devices. It has 24/7 lifetime access, variety of comprehension assessments, certificates of completion, and of course, it's consistently being updated to make sure that it's up to date and is adding as much value as possible to you guys. So everything here is taught by Brian and myself, so you got a little glimpse of what it's like to be Brian's student today on the web class. And just a little overview of kind of what's covered here. There's over 8 modules, like I said, over 10 hours of content, but just review some of the content that's inside of the early modules. Really going to walk you through how to do a lot of the stuff that we talked about today. All right, it's going to really guide you through that process and push you to actually implement and act on the information. That's one thing that the course is really designed to do, is actually make sure you follow through and implement what you're learning. So some of the materials here, factors that influence the market, you're going to get a really good deep dive on all the different security options and financial instruments in the market. Some more advanced strategies of options and things like that. A lot of retirement type of information, retirement planning. One of the modules we added recently, which is really strong, and we've had some great feedback so far, is the over-the-shoulder look at daily trades from Brian's portfolio. So not only are we going to tell you about what Brian does, Brian's actually going to go ahead and start recording his screen and documenting the entire process of why he wants to purchase a particular investment, why he wants to move forward with that, and then do a sort of post-mortem on that and how that panned out, what he learned, what worked and what didn't work. So you can kind of learn along while Brian's doing some of these trades. So just to be clear on who this is for, we want to make sure that this is all inclusive of, regardless of what your financial goals are. So if you want to utilize investing as a tool to make money so you can achieve some of the short-term goals, this is for you. Or if you want to use this to achieve some of your midterm or longer-term financial goals in the future, that's absolutely fine. We cover a lot of that as well. And again, we do cover a lot of information with regard to retirement and how to make sure you are secure, financially secure, safe, and planning properly so that you can be in a strong position upon retirement. Now, this is something Brian talked about a decent amount, but I do want to reiterate it because it is the #1 question we get asked. It's the #1 misconception, I would say, from beginners, is that they believe that they can't start investing because they don't have enough money. And again, you do not need a lot of money to start investing. I want you to erase that limiting belief from your mind. In fact, it's not even really about the money. It's about starting. It's about learning these principles and putting them into action, regardless of how much money you can use to start. And maybe you've heard this before, the best time to start investing was yesterday, but today is pretty good too. Again, we want to make sure that you understand that it's never too late, no matter how old you are, no matter what your age is. Okay, yes, it would have been awesome if all of us started investing 20 years ago, the first dollar we ever made, and started growing that. But unfortunately, you can't go back and change the past. What you can do, however, is make a decision today to change your future. And that's exactly what we're providing you with here. So I'm going to start to build out everything that's in the bundle and show you the value of everything. The value, again, this is not the price right now. I'm showing you the value because the Investing Quick Start course currently sells on our website for $397. Okay, so you can go right there and buy it for that price. But again, we're putting everything together in a bundle for you, and we'll talk about what that investment is at the end. But the next item here is the Investing Quick Start Guide, the book that Brian mentioned here, both in paperback and ebook format. Okay, this is going to distill and crystallize all of Ted Snow's 30 plus years of experience in the stock market. It's really going to be a perfect companion to the course, and this is going to really lay the foundational knowledge of everything that you need to know in order to actually move forward and implement it. Okay, it's going to give you a lot of insight into the strategies and experience from Ted's 30 plus years in the industry. So just as a little preview of some of the information in here, again, it's the paperback version is over 200 pages, perfect complement to beginners in addition to the course, allow you to consume that information in different format as well. Again, that's in paperbook, in ebook format. Now, there's something here I want to mention before we move forward as well. It's that you need to have an abundance mindset and not a scarcity mindset. So what I mean by that is that you need to believe and understand, okay, that there is abundance out there, that in fact, there are people making money in the stock market because of their investments every single day. And in fact, every single year, people are becoming millionaires because of their investments in the stock market. So it's not a question of if this is a possible thing? Is this actually working? Yes, it's happening every single day. You need to, acknowledge that and adopt the mentality that you want some of that for yourself, that you are going to commit to learning it so you can take in some of those profits, okay? And you can use investing as a vehicle to grow your net worth, rather than this scarcity mindset that you've already missed the boat, that there's not enough room for everybody, that only certain people are going to do this. This isn't for me. I'm too old. It's too late, blah, 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 blah. All that fear and scarcity, again, erase that from your mind. It's not going to get you anywhere. Just holding you back. Instead, you need to have that abundance mindset. So again, what you're getting here, the Investing Quick Start Guide in ebook and paperback format. These additionally 2 workbook tools that Brian has developed and uses for himself, the asset allocation workbook and the stock portfolio tracking workbook. These are going to allow you to manage and stay on top of your portfolio, allow you to rebalance that. You're going to get some extensive training in the course on how to actually use these tools, but this is going to make a huge difference in terms of making sure that you are staying on top of your specific key metrics with regard to your portfolio, and that you're able to rebalance it moving forward to achieve your goals. So again, the asset allocation workbook and the stock portfolio tracking workbook. You're also going to get lifetime access to our digital asset vault. This is what I like to call our treasure trove of additional resources for beginner investors, cheat sheets, reports, updated regularly, of course, with new material. This is anything and everything else we can create that will help you along your journey to being able to use investing to achieve your financial goals. So you're going to get access to that, again, lifetime access, and we're constantly updating that with new material as well. So again, as part of the bundle, you're getting the digital asset vault. This is my favorite part of the bundle here. We were super excited that Brian agreed to do this because we know how valuable his time is, but he's committed to providing 1 year of monthly group coaching and interactive investing forums, so that we set up the expectation that when you become part of our community of beginner investors by taking advantage of the bundle today, that it's not the end of our relationship. In fact, it's just the beginning, because we don't want to just simply give you a bunch of material and say, hey, good luck on your own. Hope you do well. No, instead, we want to give you that information and stay with you throughout your entire journey, assisting you along the way, providing as much support and assistance so that you can achieve your financial goals, so that you can succeed. Because when you succeed, then we succeed, because our goal is to make sure you are successful, to make sure you achieve your financial goals, and that's it, right? So again, you're going to get in a similar format to today on a monthly time. You're going to be able to bring your questions, bring issues that you're dealing with, bring ideas that you want to discuss for different investments to Brian, and you're going to be able to discuss that with him and everyone else in the community. This is also going to provide a great platform to discuss timely things that are happening in the market, maybe opportunities that are out there at that very specific time. Give you that platform to discuss those and review those with Brian and everyone else. So again, we're really excited about this because we know how valuable Brian's time is. And again, he's committed to helping you for that first year. So you're going to get that year of monthly group coaching. So we're looking at a total value of everything in the bundle of $1970, and that's being conservative. But again, that's not the price. That's not what we're asking you as an investment for the bundle, okay? But if all the Investing Quick Start bundle did was give you the knowledge, tools, and resources so that you would be able to retire financially secure and comfortable one day, whatever that is for you, would that be worth a $1970 investment, $1,970? Would that be worth it to you if it gave you just that? Now, again, we're built everything in the bundle so it's not exclusively about retirement. It's one of the assets or one of the pieces of the puzzle of the setting your financial goals and things like that. But if all it did was simply that, would it be worth it? And I would say absolutely, without a shadow of a doubt, because it's one of the most challenging things for individuals to be able to be ready for retirement. But For today only, we put together a special offer for you because we know you're serious about this. We know you're serious about achieving your financial goals through investing because you are here today. You've taken the time to be on this web class where you had the opportunity to watch some TV or Netflix or do whatever, but instead you took the time to be here with us, and you've stuck around all the way to the end, which really shows that you're serious about this stuff. You're committed, and the fact that you're still here, you're being engaged, you're learning. We know that this is something you can be successful with. We know that you're committed to being successful. And because of that, we want to give you the opportunity to be in our community. We want to make this as accessible to you as possible. So again, what we're doing here is making this as accessible to you as possible so you can be part of our community. No, the price is not $19.70, although we could easily charge that. It's not even half of that to be part of the community and invest in the bundle today. In fact, what we're doing right now for just a short period of time is we're going to be providing access to everything in the bundle, immediate access to everything for a one-time payment of $197 or a payment plan of $49.50 for 4 months. You can actually get instant access to all this by clicking the link that just appeared in the chat window, or by navigating on your browser to the URL listed below, bit.ly/invest class. Again, that's 90% off based on our conservative value. And again, the course alone, which is just one piece of the bundle, sells for $397. And similar courses sell for even more than that. And if you were to hire someone like Brian to work with you to achieve your financial goals as coach or some consultant to sit down with you and do this stuff, it would easily cost you thousands of dollars over the year. So we want to make sure that there's absolutely no risk involved for you with regard to this bundle. Okay, so we are providing a 90-day money-back guarantee, no matter what the issue is. If you are not happy with the products and services we are providing, no questions asked, just let us know and we will give you 100% of that money back. Again, we don't want your money if you're not happy with our products and services, if you don't think that they can make you successful. We only want to be able to provide you with value so that you can succeed. So anytime in that 90 days, for whatever reason, after you purchase, again, just let us know. Absolutely no risk for you. And we're going to be doing something a little special here for our action takers, incentivizing the first 5 people on the web class today who take advantage of the bundle. You're going to get some bonuses, and I'm going to go through those right now. The first is you're going to get 2 of our best-selling finance books right now, the Options Trading Quick Start Guide and the Penny Stock Trading Quick Start Guide, both in paperback and ebook format. Okay, now these are topics that are discussed in the bundle, in the course, and the book, but these are much deeper dives into the subject matter, and it's going to give you a more comprehensive understanding of them and how to use them to achieve your financial goals, how to implement that. Plus, okay, the next thing is you're going to get a free randomly selected stock from Robinhood. Robinhood is a commission-free trading platform. It's absolutely free to set up an account. You can buy and sell stocks without any trading commission. So typically in a lot of brokers, you have to pay, $4, $5 a trade, something like this. So this is a commission-free trading platform. We're going to set you up with a free account, and that account is going to be set up with a random stock selected from Robinhood. So you're going to get that. And that is for U.S. audience only, just to be clear. I know we have people all over the world today, but let me ask you another question. What do you think the best investment is? What investment has the highest earning potential? More than anything else, more than real estate, more than even investing in the stock market. We've been talking a lot about today, but more than even that. The most important investment you can make is in yourself. And that's exactly what this is today. We're providing you with the opportunity to invest in yourself so that you can move forward and achieve all of those financial goals. The real question is, are you serious about achieving your financial goals through investing? Okay? And if you are, are you going to be a dabbler or a master about this? Because a dabbler is the type of person who's just going to, maybe get a little interest here, a little interest there. Yes, I'll try this. Yeah, sure, I'll try that. But never really fully commits to it, and therefore never really fully achieves what they are actually capable of because they don't go all in. On the other hand, we have the master who does go all in. They are fully committed to being successful no matter what it takes, and they take it very seriously, right? And at the end of the day, they immerse themselves, they commit themselves, and they are able to achieve those results that they desire. Those are the people that are at the top of their game, and no matter what it is, and that can be you with investing, that can be you with regard to achieving your financial goals. So are you going to be a dabbler or a master? Are you going to achieve your goals or not? Are you serious about this or not? Because if you are, there's really only one answer. And the Investing Quick Start bundle has everything you need to become a master of the stock market, to become a master of investing. The only missing ingredients are from you, right? We can't provide you with any of this stuff, unfortunately, but you need to work hard. You need to be dedicated. You need to be committed. You need to have the right attitude. You need the willingness to learn, grow, and become the best you can be. If you do that in conjunction with everything in the bundle, you can be successful. I have no doubt about that. And if you keep putting off learning how to invest and saying, oh, something I should do, something I'll get around to eventually, I'll start when I'm here, I'll start when I have this, you're simply never going to become a master. You're never going to achieve your financial goals, okay? You're never going to get off the ground. So again, to recap everything, the bundle here, the course, the book, the workbooks, the digital asset vault, and 1 year of group coaching with Brian. Again, everything in immediate access for $197 or $49.50 a month for 4 months. So again, we can't really provide this deal forever. It's just not really sustainable for us. Again, we're making this available to you guys because you've demonstrated that you are serious about this, and you're exactly the type of people we want in our community of beginner investors, okay? Because our goal is to build the largest and best community of committed and successful beginner investors out there, and you are surely a perfect candidate if you're still here on the web class today. So we want to make this as accessible to you as possible, and that's why we're providing you with this opportunity at this price. However, we're only going to be able to do this for the next hour and 28 minutes, okay? This isn't something we can do forever. After that time, we're going to be increasing the price for you. What that is yet, I don't know. I need to talk to Brian, but it's going to be significantly higher. So if you aren't able to take advantage of this opportunity in this time frame, unfortunately, you're most likely going to be missing out. If you do want to get in again, it's going to be significantly more money. So again, I think that's overall my spiel here, and I think this is something that's an excellent opportunity for you guys, and we're looking forward to being able to work with you. So Brian, do you see we can go through now and answer some questions and see what the audience is thinking. Do you see any questions that you want to answer on your end?
The question about international investing comes up a lot for people that are outside of the US but are interested in participating in investments inside of the United States. There are modules in the course that address the investing options specifically for Canadians who want to set up brokerages inside of Canada, and then invest inside the United States. There are also options for people outside of North America who can simply set up brokerage accounts inside of the United States. I believe, I'm not really sure exactly how that works. We've only looked into Canada. But yeah, I would generally think that you could set up a brokerage account with a US company by going to their website in the United States. You may have some extra added taxation. You may have some added taxation issues to contend with. But many countries have contracts with they have or tax treaties rather with the United States that lower the impact of foreign withholding tax is what it's called. So sometimes your country's home government will take taxes from your from your foreign investment earnings and tax them. But if your country has a treaty with the United States, then you'll be reimbursed for that tax, is the way I understand it. What else? Yeah, when it comes to developing your financial goals, I know a lot of people are not dead set focused on any particular material item, but they just want security for their retirement and the ability to support family, and to be a financial, kind of like a financial bastion of security for their family, the people in your families who are asked to help out, or if nothing else, ask for their advice on issues. So yeah, a lot of people are looking to establish that, I guess, kind of financial leadership role within their immediate and extended families. So yeah, we didn't really talk about that a lot, but not in this web class, but in the course, there is a module all about defining and pursuing financial goals, and how your investing plan can be focused towards any given goal, whether it's to achieve a specific net worth for yourself, to start a college fund for a child or family member. A lot of people are asking what the best stock is to invest in right now. First thing that pops to mind is the fact that despite predictions, emerging market stocks did not perform as well as expected in 2018. Because they've been stagnant, I'm steadily scaling into emerging market positions. And the reason I'm doing that is because I think a lot of the pressure on emerging stocks is from the strong American dollar. So when you buy an emerging market stock, you are actually, at the end of the day, you're buying the stock in the home country's currency. So if I buy a stock from sub-Saharan Africa, I'm actually purchasing that security from a securities dealer or a market inside of that country, and that market requires they need to be paid in the home country's currency. So it's a sub-Saharan country's currency that I'm actually using. So when the dollar is super strong, then these emerging market currencies buy less. And so not only are you betting on the performance, the economic performance of the asset, the company that you're investing in, but you're also betting that the currency itself will increase in value, because when you go to sell that security, you're initially going to be paid in that currency's price. So the stocks are, you could argue that they're pretty cheap right now because the currencies are so low, and you can get more stocks for less units of currency. Therefore, your dollar can buy more stocks for less. So I think for any portfolio, emerging market presence is good, especially if you're on the younger end of the retirement horizon. If you're investing for your retirement, it's really important to have emerging markets present. And because they're so cheap right now, I think they're a good buy. Do you see anything else, John?
A couple more. A lot of people just asking generally, like, will this work for me given X, given Y, given Z? And that's, it's a good question. It's something that's important to know. Like, who is this really for? And I thought we did a decent job at explaining that, but maybe we should just kind of talk a little bit about who we designed this for, what we want this to be for people, this bundle. And you can speak to this a little more as well, Brian, but essentially, as we've discussed, we've designed the principles and the fundamentals of investing that are taught by Brian in the bundle and that are discussed in the book by Ted. They're not specific to any individual circumstance. They're not specific to having a certain amount of money. They're not specific to being in a certain point in your life. They're not even specific to location, as we've discussed. They are really all inclusive of all of those factors. It's, again, as we stated, it's not really about a lot of that stuff, especially the common one we get, I don't have enough money. It's not really even about that. It's truly about starting, even with a small amount of money, even with the smallest amount of money that, you could possibly start with, you are still going to be getting ahead of so many other people, and you're going to be setting yourself up for future growth, future success, so that you can ultimately, at some point in time, achieve those goals that you've set out for yourself using investing. So regardless of that, your position, regardless of any of that stuff, you should be able to move forward with this. And it'll definitely do, especially with regard to the money question. The course actually begins with, we take a step back before we actually get into investing, and we talk about making sure that you have your financial house in order first and foremost, because if you don't have any of that together, then you're not going to be set up for success with investing. So making sure that you have all that stuff squared away and that you are following sound personal finance fundamentals first and foremost, so that you can make sure that you are in that good position, that you have that strong foundation. And then we'll start to talk about more of a crystallization of your goals, those things, Brian was just speaking to this, but really putting into words what it is that you want to achieve. What is it that you want to use investing for? Because a lot of people come to us and they just say, I want to make more money, and that's great. That's, what we want for you as well. But in order to be successful, you have to really crystallize that and make it very specific. What do you want money for? How much money do you want? When do you want it? Because that's all going to make a difference on how you invest, the strategies you implement, the tactics you use. So that's a huge part of the course as well. And again, that doesn't matter what position you're in or how much money you have. We all need to do the goal setting exercise. We all need to set that up. So yeah, that's a little bit on that. Add to that, Brian.
No, I think you covered the issue pretty well. That defining goals is super helpful, and that's the reason why you always hear that it's important for your investments to be suitable to your investment objectives. It's because the types of investments you select should be tailored to specific objectives. And there are so many out there to choose from that, if nothing else, focusing on specific objectives will help you narrow down your search. The reality is you can't screen, search, and analyze every single stock there is out there. It's hard enough just to do a dozen or so in a given industry. But once you define specific objectives and you realize that, okay, well, I need investments that have X, Y, and Z attributes, then suddenly you're working with a smaller pool and it's a more manageable pool.
Really covers a lot of the questions. Everything else followed up with privately via chat here. So again, I know there's already a ton of you on that have taken advantage of the bundle, and we appreciate that, and we're excited to work with you. We think that's a perfect opportunity for all those who are serious about learning this stuff. So we will, for all those who have taken advantage, we'll be working with you soon. Anyone else that's still out there, we'll stick around for a little bit and ask more questions. Answer any more questions that you do have. I'm going to be turning the mic off in a second here. But we'll stick around and chat with you if you have questions. Again, another hour and 15 minutes or so. As you can see, that we'll be able to do this price, and then we'll be shutting this offer down at that price and increasing it if you do want to take advantage. So again, thank you so much, everyone, for joining us today. We will be talking to a lot of you soon, and for everyone else, we hope you really enjoyed the web class, and best of luck.
Take care. Bye.